Hello, today is Saturday. It is February 11th, 2023. Early morning report. Today's title of the session is Straight Up Move Finally Retests, and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. Disclosure statement, this post is for informational use only. The views expressed are those of the author Jonathan M. Gurney. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategies. In short, we're keeping clients aware of what's happening, the moves we made, the type of environment we're in the market. Okay, let's hit the charts. Here we go. So we're going to try to stick to the 5 minutes. Number one, the market, starting this year, has had kind of a straight up move, as the title stated. And we're getting a little bit of testing going on here. The first trigger for me that was showing some concern was the IWM, which was leading, is really starting to get a decent pullback to the 20-day moving average, and I'll show that to you. So this doesn't really seem that bad of a week, considering we're getting 2 to 3% move, 1 to 2% moves a day. But the moves that we're seeing are back and forth, like 1% moves, 1% move up, 1% move down. So 2% swings. You could have a terrible week if you sold at the bottom, or vice versa. So this week we had a positive week. My game plan going into this week was to keep things small. And we outperformed the S&P 500. We had a positive week, which is good. My biggest issue is not the strategy. The strategy works. The execution is my issue. When I hear constant negativity, it's a problem, and I'm trying to fix it, and I'm bringing on somebody to help me press the button. Other people that trade my strategy, that I give them the levels on, and they press the button, they did well last year. I did not do well, so that's frustrating. But the good news is the strategy works, and we can do well in tough environments. So you can see I had small wins. Like I was in, these are half-size positions. So 50% positions, I was in for 22 minutes, in for 40 minutes, in for basically an hour. So a total of about an hour and 30 minutes, not even an hour and 30 minutes. I'm exaggerating the time frame, but the reality is we were not in for very long at all, because I thought we were going to test lower. But at key levels, you can still get quick up moves, and that's what I wanted to take advantage of. So we beat the index by 1.55%. You can see here that it was a tough week for many of the leaders. Sectors, not a great week either. What you're noticing here is the value areas like healthcare, financials, utilities were the names that were holding us up this week. Energy still is a beast, Scooter rating of 99. That's really good. Great week for energy. It is starting to have a decent chart, as you can see here. It tested the 50-day moving average below and kind of cupping up here. Interested to see if this gap gets tested. So overall, let's take a look at the S&P 500. This is short term. We're in this basing kind of bull flag is what it's called. So here's the channel. We lost the channel that leads to selling, but we're in this bull flag, which usually leads to consolidation and higher. We still need to see that. We're kind of in that range right now. So on let's take a look at the S&P 500 key levels. So here's my favorite time frame. It keeps me in the trend. We lost this upswing trend. You can see we're down below this blue line. So we're kind of testing levels. Not a lot of damage, to be honest with you, but we're about 2 to 3% off the highs here. And when you get a straight up move, you're going to get tests. And that's where I was like, shoot, I'm very frustrated that I missed that move. But the reality is we will get better chances. And if the key levels hold, it'll be time to buy. And I think we are getting closer to that time. CPI inflation data is Tuesday. So that's going to drive a lot of the moves. The difficult part about all of this is the news is really not good at all. And so that was making it very difficult. Is this a real move, or is this just a squeeze? And so breadth was pretty good. And let me take a step back here. Switch screens, 1 second. There we go. So we're in this bull flag. This extends the view out a little bit longer. We're close to testing the 21-day moving average, or the 20-day moving average, this yellowish orange line. Very interested to see if we need to go a little bit lower. We keep bouncing when we get dips, which is a good thing for the bulls, but I'm interested to see if we need to test a little lower. Some things that were interesting is this is the first time for the NASDAQ new high, new lows that we saw a negative in a long time. And also another concerning thing is it's not rolling over by any means, but it's something to pay attention to, is the breadth is waning a little bit. And so when you see something like the IWM, which is 2,000 stocks in the index, get a little bit of a hit, this is a little bit of a warning sign short term. Again, this could be a good test and bounce higher, and that's what we're going to have to gauge. So I'm in cash currently because we did not regain a key level. We did not regain 4093 is what I wanted to see, and we did not. So we tested lower here to the 20-day moving average, logical area, and we bounced off of it. So we're kind of in this wait and see bull flag kind of consolidation. Would not surprise me to see quick moves up, but you have to be objective going into this. So the QQQ is kind of in no man's land right now, if I'm being honest. It is right between the 10-day moving average and the 20-day moving average. So not really in love with that chart. It's kind of a wait and see kind of scenario. It would be a logical spot. Again, the PMO is kind of curling a little bit. There's nothing really negative. It held up very, very well. So I'm kind of at a 50-50 standpoint at this point to say, hey, is this move real or not? 4080 is key. Can we stay above 4080 in the S&P 500? It's right here. We closed just above it because of a squeeze at the end of the day. So hard to really judge whether that's real or not. Some stocks, because we are above the 50-day moving average and it did cross the 200-day moving average, per rules, you can start to look at some individual stocks. So XLE, as you can see, this is a sector and it's starting to curl up. Wouldn't be surprised to see that fill the gap. XOM, which is within XLE, ExxonMobil, is new highs. So this is a very strong sector. I like to see it. Monster beverage, people are addicted to it. This is a long base for 2 months after a nice, really nice move. This is not a bad look for Monster beverage. So looking into that one, a client of mine brought up Box, and I thought it was very interesting. Got a little bit of a pullback to the 10-day moving average, as you can see, which would not be surprised if this gap gets tested eventually, and see how things happen there. So I'm keeping an eye on that. Box, Monster. Tesla's been a monster as of late, but also needed a little bit of a breather. We'll see if that's all you get. But overall, pretty extended here, getting a little bit of a pullback. So risk reward at this point, I'm in cash because we did not gain a key level after a test lower. You got the typical bounce off a overnight gap down, and we just need to see if this is going to be real or not. Again, CPI is going to probably dictate a lot of things, and the first move is probably not going to be the one that stays. So overall at this point, because we are below a 5-day moving average, a declining 5-day moving average, this orange line, it means to take care. And we actually did cross the 5-day moving average did cross a 10-day moving average, which is a warning sign to say this could reverse. With that said, we're still within this bull flag that could fill right back up here. Would not surprise me to see like 41.46, 41.43 again. Anything above 41.17, I think, if it holds that area, could really squeeze. And I don't think it's ironic that there's a lot of levels right around 41.17. So would not be surprised to see this magnet here eventually, but I think I hope we continue to get red opens because it might induce some buyers. So overall, it's a mixed market. There's nothing really too bearish about it. I think we're just got a little bit of an extension, a little bit too high above the 5-day moving average, which you can see right here. And it's testing lower. Like, this is a big move, missed it, but you can't chase it. And that's where in previous years I've chased that, gotten in trouble. So bought the top and got killed. But overall, it's consolidating pretty well as of right now. We'll see if buyers come in. That's where I stand at this point. But overall, we didn't have enough evidence on Friday. It gapped down big time. We basically tested 40.51. I had a trade on at 40.86 or 40.83 and gapped down overnight. Unfortunately, regained it, took the profit, and said still pretty iffy environment at this point. So overall, it was a positive week. We'll take it. Look forward to seeing what this week brings. And again, whether short or long, I don't need a bias. I can trade both directions. So appreciate you guys. Have a great weekend. Just wanted to get this out to you. See ya.